Hello everybody, Houston here. I hope you guys are doing well, having a great day or a great night, and let's jump into the charts. Just a second. Okay, let's go. So first things first, let's take a look on the volume that I know we had a bearish divergence here. So it's crystal clear here. We have decreasing volume all the way since 2000. And for OBV, what we have here, it's like there is not much people interested in selling, okay, because the smart money is not shorting the trend. It's a bull trend, so no news here. And now let's take a look on this picture here, and then we jump into the 2000, 2008, and then in the last action here from yesterday. So let's go to the weekly. We're going to cover some interesting things here as well, and not only about Amazon, but there is a lot of clear and crystal clear things here. Okay, so first of all, this is 2000, and here from 1996 to June 2000. Okay, so right here. Okay, so this period right here was Maximus Solaris. Okay, if I'm not wrong, it's from the sun cycle number 23, if I'm not wrong, but have this in mind. And this period here till 2009. Okay, so here, so this here is Maximus Solaris. Here was the apex, and this scenario here was the Minimus Solaris, and we only end up with new highs in the next Maximus Solaris. Okay, so very relevant stuff. And now let's take a look on the retrace for Amazon. If I'm not wrong, we made 80,000% on our way up. Yes, 80,500. And our way down, we made it 95%. Okay, so it's a very interesting here, because as you guys can see, crystal clear here, we end up with a higher high. Okay, which means we were in a bull market since the early days, despite the .com crash. Okay, so just a few things here, and now let's take a closer look here. So here we had another thing, if you are new in my channel, every time I make a new analysis of an asset like Amazon, I pick everything, okay, from the early days to the last action. Okay, so this is my first video for Amazon. Okay, so let's go here. Double top, marginal higher high, and here, let me see. Okay, so for the bull continuation here, let's take a closer look. Okay, so this scenario right here, okay, it's not symmetrical, but it's bullish continuation. Okay, so not so clear, right? But we have more clear evidence for such, because back in the day, a lot of people said here in this scenario, oops, a second, this is it, Amazon is not going anywhere, nobody's going to buy books or CDs in the internet, they are done, this is it. But the smart money knew what it was about. Okay, and so all those levels here are key levels. Okay, for example, 5, 8, where is 8? Here, 13, 21, and 34, just for this range here. Okay, so another way to look at it, the smart money was aware of what was happening. As you guys can see, all the activity around these levels, they finding value on these ranges. Okay, so let's keep going with the pattern. Just a second. Oh, another interesting thing about this guy here on this top, it was 113. Let me take a look on the number here. So the numbers we were looking for was 89 and 144 for the top. Okay, so as you guys can see, the relevance of such levels. So this was in the markup since the early days. Okay, so no news about this range. We can see again and again. Okay, so back to the pattern. Just a second. Okay, so for the bull continuation, this was a broken mirror for this structure here, bullish continuation, and we didn't had a crystal clear entry here for people who are trading back in the day, but it's still bullish, all the way bullish, all broken mirrored patterns. And now we had our bull break in October 2009, which was Maximus Solaris, okay, the next cycle. So now let's jump into 2008 right here, closer look. So we broke bearish in December 2007, which is the winter pivot, Yule. Here. Okay, just 1 second please. Okay, let's go. And so this is our winter pivot from the seasons pivot, a theory I'm working on. And then we had the bull, the bear break, bearish continuation, and let's measure this structure here. Okay, so again, another clue for the bears to take over. We made it to 780, and then we end up rejected. So this is a bear trigger, and let's see how much we lost here. 6.5%, just a little ahead from down theory. And now let's go. Okay, so here was a period of Maximus Solaris from 2009 ahead. And now let's take a look on the last action. Okay, so I will zoom here. Another interesting thing about the volume, you guys that like to use RSI, for example, you can see the divergence there as well. Okay, because we have the price going up and the strength going down. Okay, so let me clear this picture here. Okay, so back in the day, if I'm not wrong, this was October. Yes, October before. Yes, okay, so let's start from the beginning here. Okay, so here was our harvest season. Yes, right here. Let me change the color. Just a second. So here was the harvest. I highlighted this event back in the day. Also for crypto and also for all the other markets. We were right spot on this event here. And then what we had next was a bullish, perfect bullish continuation pattern. Here. So here we had another higher low. Yes, marginal, but okay. So and then we traded this one here, the first one, not the second. Our target, we made it on the second bounce in the last days. Our second target was around this level here, if I'm not wrong, okay? But I have to check the charts. So we made it this first trade. We longed this scenario here, and we closed it right on top because we had a bearish news coming out, and not the conventional news, okay? But we jumped out below the top of this green candle here. And so what do we have for now? Let me take a closer look here. Another interesting thing, let me see, June. Okay, so this is the summer. Okay, so this will be the beginning of the summer, and the next Maximus Solaris, the next sun cycle, will start around June and September. So it's here to, okay, so here. So this is our range for the next sun cycle to begin, okay? And then I will talk about this again later, so you guys understand what I see in the bigger picture. And let's measure now a 50% retrace for down theory, which we believe it's not over yet. Okay, so around 50 and 20, that's the level I am looking for. Okay, just a second. Just a second, sorry. So this is 50. Okay, so this is the correction we are waiting for, a 50% following down theory here. And now let's take a closer look in the small picture. So this event here is the one that I can talk about, you guys know. And here we made above the 100% retrace. Let me take a better look here. So as you guys can see, we made it above the 100. If I'm not wrong, it's also above 127, which is somewhat bullish for the short time frame, but the longer time frame, the bigger picture, we have a big red flag here. Okay, so a very concerning scenario. I'm going to show you right now. So this is what we have, and this is what is valid for now. And so this is a rising wedge on top after new high. So in my opinion, it's very bearish. Let's take a look on the 4 hours. It's more clear. Just a second, please. Okay, let's go. So if we, okay, just for the sake of this example, let's keep following the line. Okay, just for the pattern example. Okay, so here we have two issues, maybe three. The first one, the rising wedge, which is bearish, and on top can be and likely to be as a reversal, not in the trend, okay, but in the short time frame picture. And the second problem we have is this kind of behavior here. Can you guys see? This is a corrective behavior, which means it's aligned with the last sell. Sell, catch up with lack of firepower, which give us not a bear flag, not yet, because we are ahead of 50, if I'm not wrong. Let me take a look. Yes, we are ahead of 50 below the golden, which is a key level, and also 780.60. So what we can see here, we can see this guy keep going up. So for example, our sell, we keep going up and make another 127% from Fibonacci, which would give us another higher high on top of the rising wedge. And also another thing that we have to look at is this. So this is our first guy, the second, and possible a third one. And then it will be 100, maybe 100,000% bearish, okay? Because I don't believe nobody would long in such scenario. The odds for the bulls here are very, very low. Very, very low. I don't believe they are going to keep buying here. We know what is happening, okay? Some words I can say, but everyone is aware of what is happening in the stock markets right now, okay? And so, and another interesting thing is this: we have this lockdown stuff. We have economic collapse globally, and stocks keep printing new highs even after the big crash. So this is a big issue, because otherwise, if we keep going and making highs, what's going to do? What's going to happen? Everyone can quit the job, buy stocks, and just live happy forever, because we keep going high all time. So that's not how it works. And soon people will be punished again, okay? Because this kind of move is not sustainable, despite all the money they are dumping on a daily basis. So now let's take a closer look on the 2 hours for more evidence. Okay, so not a big deal here. We were looking for this scenario here, and the bulls were trying to print a continuation here, and then we had the bear break. Right after they made the comeback, still a lower high compared to the previous one, and right after with another 100%, 110 if I'm not wrong, with an impulsive move, but not bullish, okay, again. And then our gap following also SPX and Dow Jones, we had a similar scenario here as well. And we have this bearish picture here, okay? So I won't be surprised if they keep printing a bullish continuation from here to another new all-time high, okay? So that's the range I'm looking for, another higher high before I start looking for shorts, okay? So remember, this is not financial advice, for educational purposes only. And just for the sake of this example here, let's take a quick look here. Sorry. Okay, so our 200. Okay, just 1 second, please. Okay, so this is the range I'm looking for inside the hundreds. Okay, I don't believe we will make it to 200, but it is possible to see. And those are the levels we are waiting. Okay, so now let's take a look on the short time frame. So again, as you guys can see, all the catch up non-stop. And right now it's not like we are trapped. Okay, not like a trap, but we are trading in a narrow range, and very important, the 50 price average for this range, and also below the key level, that is the golden, but we already had confluence before, so not a big deal. All the levels are already triggered. And now we will look for a close above and maybe an impulsive move. I don't know, maybe a straight move up for a new high. We will keep watching, and don't forget the next sun cycle will start, and we always had confluence with the periods, the cycle of the sun. Okay, so this is no BS, this is accurate, this is historical evidence. We have proof for such things, in such events. And so in the bigger picture, that's what we are waiting for. We had key levels here. Let me see if I can find the numbers. The first one is 1597. But this one won't hold. Okay, so let's look for the next. That is 987, but we are not going to make to 987 as well. So what we can expect is the between here in the 1597 and 1217. Okay, and some of you may be concerned, but for a bull run like this, so this is beyond parabolic. Okay, and I will tell you, a 50% drop here won't hurt the market at all, because it's very close. And also we know Amazon soon. So for you guys to have a better idea here, I'm going to show what will be the next all-time high for Amazon. Okay, just give me a moment, let me check here. 2475 was the all-time high, and our next target will be 2584. 2584, and the next one for later bullish continuation. Okay, I'm not talking about the short time frame. Okay, and our next target for Amazon will be 4181. Okay, without a doubt, this one will be taken out very easily. Okay, and another thing about our next target here, let's zoom. The thing is, if we make a new high here, this level will be triggered, 2584. Just a second, please. Okay, so this level will be triggered, will give odds for us to the next level, that is 4181. And if they don't, if the bulls don't make it, we will look for a more conservative bull break. Won't be like this one's very impulsive. Okay, it's somewhat similar with what we saw back in the 95 to 2000 in the early days. Okay, so I believe this is it for now. I hope you guys are liking these charts, the analysis, all this new thing about the Fibonacci and the confluence and the targets. Well, I hope you guys are doing great. I hope you are having a great day, a great week. And now let me take a look in the chat. Akriba, Akriba. Okay, so hello, buddy. How are you doing? Erkan, Mr. King. How are you doing, buddy? Marvin, yo Marvin, how are you doing? I hope you're doing great. So guys, this is it for now for Amazon. I hope you guys enjoyed this video and this info. And soon I will be live for Tesla. Okay? David. Hello David, how are you doing? Thank you for watching. Thanks for your support. So this is it guys. I will be live again with Tesla and I will see you guys soon. Thank you.